Like and subscribe and click the bell icon to get new video updates.
Federal Reserve hikes official interest rates by 0.5%. AEST rises. Dow Jones jumps 900 points. The U.S. Central Bank has increased official U.S. interest rates by an expected 0.5% to curb the biggest price rises seen in 40 years. The Dow Jones index jumped 2.8 pc to 34,061. The S&P 500 index rose nearly 3 pc to 4,300, and the Nasdaq rose 3.2 pc to 12,965 in an unanimous decision. The U.S. Federal Reserve has lifted the federal funds rate by 50 basis points to a new target range of 0.75% to 1%, the biggest increase in 22 years. Despite a slowdown in the U.S. economy over the first few months of the year, the Fed's policy setting committee said that household spending and business investment remained strong, although it noted inflation was high because of the war in Ukraine and the COVID-19 lockdowns in China. Consumer prices surged by 8.5% over the past year, and in March, the U.S. Central Bank lifted rates by 0.25%. Its first rate rise since 2018. Job gains have been robust in recent months, and the unemployment rate has declined substantially, the Fed said. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher energy prices and broader price pressures. At his first face-to-face press conference in 2 years, Mr Powell played down the prospect of a 0.75% rate hike. However, he said more 0.5% increases were likely at the next 2 meetings. Inflation is much too high and we understand the hardship it is causing, and we're moving expeditiously to bring it back down, Mr Powell said. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing and transportation. Read more. The move saw the greenback fall to a one-week low of 102.48 on the US dollar index. Fed very late in responding. Global investor Mohamed El Erian tweeted that the Fed should have raised rates sooner, and the too exuberant rally on the US stock market after Mr Powell all but ruled out a 75 basis point rise was not justified. One big issue is that the pound Federal Reserve is already very late in responding, he said. And Charles Schwab chief investment strategist Liz Anne Sonders warned about the risk of a recession in North America from higher interest rates. Although the Fed addressed the contraction in the economy in the first quarter, it focused more on the strong gains in final sales to households and businesses, Ms Sonders wrote in an investment note. For what it is worth, we believe the risk of recession is elevated and should not be dismissed. The U.S. Central Bank said its $9 trillion $12.4 trillion worth of bonds would be allowed to decline by $47.5 billion a month in June, July and August. The bonds will be allowed to mature and roll off the Fed's balance sheet, rather than being sold into the market by the Fed. Space to play or pause, M to mute, left and right arrows to seek, up and down arrows for volume. The Australian dollar jumped by more than 2%, to 72.66 US cents overnight, as the greenback fell to a one-week low. At 4 p.m. AEST, the local currency had dropped 0.3% to about 72.39 US cents. Spot gold, which is seen as a hedge against inflation, rose 1% to about $1,900 an ounce in Asian trade. Brent crude oil jumped more than $5 a barrel overnight, or around 5%, to $110.35, as the European Union moved closer to banning Russian oil imports by year's end. At 4 p.m. AEST, Brent crude was up another 1% to $111.22 a barrel. NAB posts half-year profit. National Australia Bank saw net profit for the 6 months to the end of March rise 10.7%, to $3.55 billion, thanks to higher revenue from the economic recovery and strong demand for home loans. Cash earnings, the bank's preferred measure of profit, rose 4.1% from the same time a year ago, to $3.48 billion. It said it benefited from strong growth in lending, plus 10%, and deposits, plus 12%, over the half year. However, net interest margin, the profit margin from lending, fell 11 basis points because of tough competition for loans, partly offset by lower deposit and finance costs. Expenses rose and the bank said an agreement with financial crimes regulator AEST for breaches of anti-money laundering laws would cost the bank $120 million per year until the 2024 financial year. NAB's interim dividend was 73 cents per share, fully franked, up 13 cents a share on the interim dividend a year ago. The bank's chief executive, Ross Masuan, said he was pleased with NAB's performance, although the bank had a lot more to do to deliver for customers. We are growing right across the bank. We are growing business lending, home lending, unsecured lending, deposits and transaction accounts, Mr. Masuan said. We are delivering better results because we are delivering for our customers.